Hello everybody. In this video, with earnings just coming out yesterday, I'm going to be doing a brief stock overview on Google, and this is less going to be a deep dive into their financials and more a general outlook in Google's future and me giving my opinion on Google as an investment. And if you do enjoy this video, I have lots of other brief stock analysis videos on my channel, so be sure to come check it out. So without further ado, let's get right into it. The earnings were released yesterday, and what the earnings said was that there was about $31 billion in revenue expected, and they actually made about $32 billion in revenue, so about $1 billion higher than was expected by analysts. And then expected earnings was $13.97, and actual adjusted earnings was $14.21. So Google doing extremely well compared to analysts' expectations. And with the result of those positive earnings, Google is up over 10% today, and that was a little bit surprising to me because the everyday investor probably is not buying a ton of shares of Google, but what it is that Google is probably a pretty popular stock among a lot of really big investors in investment banking. If we look at Google's performance in the last 5 years, the stock price is up over 108%, and if you think back just 5 years ago, Google was still a huge company. So for them to still be up over 108% in the last 5 years, I think is extremely incredible. And I don't see any reason why they won't do it again because they were huge then, they're huge now. So why wouldn't they continue the growth? Google was able to increase revenues per user a little bit in existing markets, but I think a big reason why they were able to increase as they have in the last few years and why they will continue to grow is because they were expanding globally into new expanding economies. And it's extremely valuable for Google to be the industry leader in the search engine market. If you look at their main competitors, there's Yahoo, and Yahoo is not doing extremely well in the last few years. They're not even their own publicly traded company anymore. And then there's Baidu, which is not doing well at all either. The Chinese people don't trust Baidu, and that's by far the biggest market for Baidu is in China. And then there's Microsoft's Bing, which is actually doing okay. They might take a little bit of Google's market share, but Google is definitely still growing a lot over Baidu and Yahoo. Google is still able to increase revenues year over year at an extremely impressive rate for how big the company is, and in 2018 they had extremely impressive earnings, and then as we just saw from Q2 of 2019, earnings are still doing extremely well. And I actually didn't want to show you this too much to talk about Google's revenue and earnings, but more so to compare it to their main competitor. Just a couple of years ago, Yahoo was traded under its own name, but now it is merged in a way with other companies such as AOL, and it is traded under the name Alibaba. And as you can see in 2018, they had extremely unreliable earnings. They were not profitable, and they barely made any revenues, and they're doing a little bit better in 2019, but as a competitor of Google, they're doing pretty terribly, and I think Google is definitely doing a lot better expanding in the market and doing a lot better with profitability and making more profit off of each individual user. And I just wanted to take a look at a couple of points by an analyst at Morningstar who gave Google a buy rating. The first point is that as the number of online users and usage increases, so will digital ad spending, of which Google will remain one of the main beneficiaries. All throughout the world, in Asia especially, but as well as in Africa and South America, countries are developing and citizens are gaining access to the internet, and I think Google is able to capitalize on that better than any other company right now. And then the second point is that Android's dominant global market share of smartphones leaves Alphabet's Google well positioned to continue generating top-line growth as search traffic shifts from desktop to mobile. Androids are a lot cheaper than iPhones and doing a lot better in a lot of different economies that are developing, like I just talked about, all around the world. So I think Google that owns Android is able to capitalize on that, like I just talked about, a lot better than their competitor Apple would be able to. And then the third point is that the significant cash generated from the Google search business allows Google to remain focused on innovation and long-term growth. And I'm actually going to talk about that a little bit more in a minute with Google Venture, but Google's actually able to invest a ton of money in smaller companies that are going to do extremely well in the future. And then on that investment, Google can make a lot of money. And I'm actually going to talk about Google Venture in just a minute, so definitely stick around for that. And then I also wanted to take a look at a couple of points I had an analyst at Morningstar who gave Google a sell rating. The first point is that there is little revenue diversification with Google. So Google makes almost all of their money through their search engine, and I don't think that's the worst thing. Google may have its ups and downs with its stock and the company, but it's not like overnight people are just going to stop using the Google search engine, and I don't think there's any kind of downward trend in the near future for Google. So I think it's okay that most of their eggs are in one basket with the Google search engine from the ad revenues from that. And then the second point is that Google is allocating too much capital toward high-risk bets, and what that's referring to is some of their venture capital investments, and I definitely agree. They are investing some money in some life science companies, especially, that I don't necessarily agree with, and I don't know why that decision was made. But if they're making, $35 billion in revenue and they want to invest $100 million in that, there's some potential growth opportunity there. So if they want to do that, then by all means, go ahead and do it. Another aspect of Google is Google Venture that I think has a ton of growth potential, and Google currently is hugely invested in Uber, and they actually started investing in Uber several years ago when it was valued much lower than it is now. So even with what Uber is valued now, and even though they're not profitable, Google has actually made a ton back on their investment in Uber already. Here are 9 more companies that Google Venture is hugely invested in, and these are all in the technology and enterprise fields. That includes things like information systems, data analytics. They take a lot of data and generate revenues from that data and sell it to companies. Extremely profitable companies that I think Google Venture is doing extremely well by investing in. And then Google is also hugely investing in AI, robotics, hardware, quantum computing, a lot of definitely very successful companies that are not public companies, but I think Google is going to make a lot of money on long term. And as a long-term investor, that's definitely what I'm interested in. And then lastly are the life science investments from Google Venture, which I definitely don't necessarily agree with. I typically try to stay away from healthcare investments just because it can be so speculative, and it's really hard to pick a winner, but I'm sure the analysts at Google know a lot better than I do what to invest in. I definitely love the company, and I am a shareholder of Google, but definitely do your own research if you are interested in getting involved with the stock, and subscribe for more content if you did enjoy this video, and come check out my channel for some other great investments. Thank you so much for watching.